If you think £100 isn't enough to start investing, you are not thinking too small, you are thinking too short term. Because the difference between people who build wealth and people who stay stuck isn't income, it's behavior. And today I'm going to show you exactly how to turn £100 into start of real long-term wealth in the UK step by step, even if you are a complete beginner. Most people in the UK don't invest, not because they are lazy, but because they are confused. They think, I need thousands, it's risky, what if I lose it, I don't understand ISAs. And with the cost of living rising, inflation still eating into savings, and interest rates moving with the Bank of England, it feels safer to do nothing. But here is the truth, doing nothing is riskier, because cash in the bank account actually slowly loses purchasing power over time. So the real risk is waiting. Why does £100 matter? £100 is not about becoming rich tomorrow. It's about becoming someone who invests. It's the identity shift. Because once you start, you stop being someone who wants to invest. You become an investor. And investing is a long-term game. Let's say you invested just £100 today and then added £100 per month. If that grew at around 7% per year, which is roughly the long-term historical average of global stock markets in 25 years, you would roughly have 80 to 90,000 pounds. That's not magic, that's compounding. And compounding only works if you start. Exactly how to invest £100 in the UK. Let's make it simple, no jargon, no confusion. Step 1. Open a stocks and shares ISA. This is your foundation. A stocks and shares ISA is a simple tax efficient investment account. In the UK, you can invest up to £20,000 per year inside an ISA. Here is the powerful part. You pay zero capital gains tax, zero dividend tax. All growth is tax free. You don't open an ISA directly with HMRC. You open it through an investment platform. Step 2. Choose a beginner-friendly platform. Look for FCA-regulated, low fees, easy app interface, ability to build index funds or ETFs. Examples in the UK include platforms like Trading 212, Vanguard or Hargreaves Lansdown. You are not looking for the perfect platform. You are looking for simple, safe, low cost. Fees matter long term because high fees quietly eat into compounding. Step 3. Choose your first investment. Now, this is where beginners overcomplicate things. You do not need to pick individual stocks. You do not need to analyze companies. You can simply buy the market. That means investing in an index fund. An index fund is a basket of hundreds, sometimes thousands of companies. For example, a global index fund like FTSE Global All Cap or an S&P 500 ETF, which tracks the US 500 largest companies. When you buy one of these, you are instantly diversified. This means money is spread across companies and countries. You are not betting on one company succeeding, you are betting on the global economy growing over time. Step 4. Invest the £100. Once your ISA is open, deposit £100, choose your index fund, press buy. That's it. It's really that simple. Step 5. Automate it. This is where wealth is built. Set up a monthly direct debit, even £50 or £100 per month. Automation removes emotion. And emotion is what destroys beginner investors. Let's be honest, the market will go down sometimes. It always has. There will be scary headlines, recessions, elections, crashes, but zoom out. If you look at global markets over 20 or 30 years, the long-term direction has historically been up. Short-term drops are normal. They are not failures. They are the price you pay for long-term growth. If you invest for 6 months, it's risky. If you invest for 20 years, history shows your odds improve dramatically. Investing rewards patience. What happens if you actually stay consistent? Let's run a realistic scenario. If you invest £100 today and £100 per month for 25 years at 7% average annual return, you could end up with roughly £85,000. Increase that to £200 per month, you are potentially looking at £170,000. And remember, this is inside a stocks and shares ISA, tax free. Now imagine doing this from age 25 to 50 or 30 to 55. That's how ordinary UK earners quietly build six-figure portfolios. Not through luck, through consistency. The most important lesson, you don't need more money to start. You need more time in the market. and time only starts when you do. £100 isn't about the amount, it's about the momentum. And momentum compounds. If you have been waiting until you know more or until you earn more, this is your sign. Start small, start simple, start inside a stocks and shares ISA, and let time do the heavy lifting. Because in 10 years, you won't regret starting with £100, but you might regret waiting. If this helped you understand investing in the UK more clearly, subscribe. Because I break this down step by step without the nonsense. And remember, wealth isn't built by big moments. It's built by small decisions repeated consistently. Thanks for watching, and I will see you on the next one.